Yes, Sirski, y'all know the vibe. It's your boy D Waugh, co-creator at ThinkinGenWealth. Today we're gonna go over exactly what the 60-30-20 rules, which is pretty much exactly how you could set up your investment portfolio, the way I do it, and also you're gonna go over the 4 best ETFs and the 3 best stocks that I'm looking at for this specific model. Without further ado, let's get straight into it. All right. So boom, what is the 60-30-10 model? 60-30-10 is pretty much how I personally split up my investment portfolio, right? So overall, 60% of my investment bread goes towards ETFs. What are ETFs? ETFs are essentially stocks that hold a bunch of stocks into one. All right. So for example, the stock ticker VOO is a company that holds the 500 best stocks in the US. All right. So if I invest $1 into the VOO, that means I'm investing at least $1 into the 500 best companies in the country. All right. And that's the best thing you can do when starting off with your portfolio because it diversifies your bread. So that means if you see Nvidia drop 30% in a day, your VOO may drop 5%. You feel what I'm saying? Because it's diversified across multiple different companies that's invested into. Feel me? So that's why you want to always start off with ETFs, in my opinion, because with ETFs, you're automatically putting money into the market and the overall market. So you're diversifying your portfolio, not having to worry about stock picking and looking over financial statements and balance sheets and this, that, the third. No, you could just buy and relax. Okay. Now, the 30% would be going into individual stocks. All right. And these individual stocks, I only like to pick 3 of them that I buy over the next 20, 30, 15 plus years. Right. And these 3 individual stocks are what kind of scale up and hyper boost your portfolio. It's like putting a nitrous in your engine. You feel what I'm saying? Because these 3 stocks are stocks that you feel like you use every day, and you feel like are going to be beneficial for the future. All right. And then the final 10% is what I personally like to put into crypto. All right. Everybody has their feelings about crypto. Some people don't like it. Some people don't understand the use case. I get the use case piece. That's why for me personally, I love investing into Ethereum and XRP because they both have an actual use case. All right. Bitcoin itself is a competition towards inflation in the US dollar, but it's not even acting like that anymore. So even the use case of Bitcoin is going down. But the use case of XRP and Ethereum is still always going to be there. So that's how I like to structure my portfolio personally. That's what we teach in our Discord as well. When it comes to trading and investing, it's a little different. We allocate a lot more bread to trading and investing, but we also allocate most of our bread towards actually buying and holding. All right. People love trading is sexy. Day trading, swing trading, leaps. That's sexy, right? But the real wealth builder is when you buy and hold shares. Okay. The leaps and the investing and all that is just cash flow that's going to lead to you buying more shares. Okay. So without further ado, I'm going to go over one of the 4 ETFs that would be a pretty good position, in my opinion, to start your portfolio, and 3 stocks that I think will be a good position to start your portfolio. Again, this is not financial advice. Please do your own research on everything that I say. I'm just a dude talking on the internet. Okay, so don't even listen to me because my scenario could be different from yours. All right. Without further ado, let me share my screen. Let's get straight into it. All right. So the first ETF that I would look at is VTI, right? Now, VTI is essentially the whole entire stock market. All right. It's the whole entire stock market in one bundle. All right. It tracks the whole market, the total market. That's why it's called the VTI. It tracks the total market. All right. The top 5 holdings in this company specifically, let me pull them up. Not company. In this ETF specifically, I know number 1 is Nvidia. Nvidia makes up about 6% of VTI. Yeah, Nvidia makes up 6.2% of VTI. Second is Apple. Apple makes up 5.9% of VTI. Third is Microsoft. Microsoft makes up 4.4% of VTI. Fourth is Amazon. Amazon makes up 3% of VTI. And lastly is Google. Google makes up 2.7% of VTI. All right. So within this, you're investing heavily into essentially the Magnificent Seven, which is the best stocks for the technology sector specifically, but you're also diversified into the whole entire market. All right. So again, diversification is going to save you from really red days. You're going to be red, but not as red as investing into one stock. Okay. So VTI, That's the first ETF that I personally love looking into. The next ETF that I think will be good for a portfolio like this, if I was starting my portfolio brand new, is VXUS, right? VXUS is international stocks, all right? So VXUS specifically holds stocks like number one, Taiwan Semiconductor, which is huge. That's going to be a big stock within this AI build out for the next 5 to 10 years. They make up 3.87% of VXUS. Then we have Samsung that makes up 1.6%. ASML, another big data center AI build out, that's going to make up 1.29% of VXUS. SK Hynix makes up 1% of VXUS. And this company called Tencent, I don't know what Tencent is, but they make up 0.86% of VXUS. Now, I like VXUS because, again, it's diversification. You're already investing into the total stock market of the US when you buy into VTI. So you might as well have a hedge and buy into the total international stock market, the stocks that aren't on the US stock market that you can't touch. All right. So I really like VXUS for your second ETF. I think that would be a good position for you to start off a portfolio for sure. But again, this is not financial advice. It's just what I would do. Okay. Third, we have AVUV, and this is all for small caps, right? So AVUV is essentially an ETF that purposely tracks the small caps that aren't like everybody knows about them. Like cheap, small, profitable companies is all the companies that live in AVUV. All right. For the top 5 holdings of AVUV, you have names I've never heard of. I'm gonna look into though. We got Bayazit, which makes up 1.3%. We got Matson, which makes up about 1%. We got SM Energy, which makes up 9.96%. You got Lear, which makes up 0.88%. And we got Avnet, that makes up 0.86%. These are all small, deliberately like not super giant, small cap companies that are profitable. Okay? So I really like this again because when you look at diversification, you have VTI is going into the total stock market. You have ASUS is going into the overall international market. With AVUV, not ASUS, what was the ticker again? I'm fried. VXUS, excuse me, which goes into the international stock market. With AVUV, now you're getting a piece in the play of all the small caps that don't receive the same attention but are still great companies. All right. This is the power of ETFs, y'all. You don't have to pick one. You can just buy all. All right. And there's an ETF for literally everything. If there's not an ETF or something you're looking for, there's going to be one. All right. Last but not least, we have BND. Now, BND actually isn't stocks. It's actually the bond market. This is the total Vanguard bond market. And the reason you would look into this is because, again, diversification. When you're building out your portfolio, you want to make sure you have hedges, right? Something that's not going to move as fast as the stock market does. And the bond market is essentially the big brother of the stock market, all right? This specific ETF holds about 17,000 individual bonds meaning from the government, from companies, etc., right? It's roughly 2/3. There's no concentration to speak of. It's roughly 2/3 of U.S. government and agency debt. So a lot of this is going to be within the U.S. bonds specifically, all right? Now, you're not going to see real growth from this, but the whole thing is you're going to see steady growth. Maybe 3%, 4% a year. But, hey, at least you have a hedge in case the market pulls back 20%. Okay? So that's what, as you can see up here, back in when COVID popped off, look at it was at all-time highs because, hey, everybody wanted to flee a safe. All right, now it's tech heavy. Everyone wants to buy into tech. So that's why you see in the bond market not performing as well with this ETF. But when times get tough, back in 2020, that's when you're going to see this run up a little bit, okay? Now, this is specifically how I would set up my portfolio, my 60%, if I was to pick out 4 ETFs, because you want to set up that establishment, that base, So now, whatever happens with the individual or the cryptos, your base is going to make you, all right? Now, what would be my top 3 favorite individual stocks that I would start off with? Right now, personally, number 1, I would start off with Microsoft. Now, the reason I love Microsoft here is because I'm on the 10-year weekly chart. And this purple line right here is called the 200-day moving average, right? So this 200-day moving average is pretty much the average price of the stock for the past 200 days on this specific time frame. All right. And as you can see, every time the candlesticks touch this line, this purple line, look what happens to the stock. It runs up every single time. It's done that for the past 10 years. Okay. So that's why I really like Microsoft here, because once you get close to this line, that's a great buying opportunity for a company that you know is probably not top 3 best ran companies in the world. All right. Really love Microsoft here. They are still pulling back a bit. They just rejected this line here on the daily chart. But the biggest thing you want to zoom out and look out to is the 10-year weekly and the 3-year weekly when you talk about long-term buy and holds, because that's what's going to tell you the conviction of when you should buy and how much you should be buying when it comes to stocks like this. You're not going to see a dip like this with Microsoft a lot. All right, the last dip we had with this like Microsoft was early Liberation Day, and then back before that was in 2022. All right, this rarely happens. I love Microsoft for sure for your 3 stocks, right? Your 3 stocks for your 30%, okay? Next, I love Meta. Now, the reason I love Meta is because, again, it's trading very below its all-time high. As you can see right here, it's not touching the purple line like you see here at the 200-day moving average on the 10-year weekly. But you see it's been consolidating on this line for a bit. So it's consolidating for a bit right here. And that's a good sign because eventually it's going to have to break out of that, right? So even if I draw this pattern here a bit on the 1-year daily chart, you'll see eventually it's going to break out of this, right? And Meta is one of those companies, again, where their business model is going to eventually, their business model, their moat itself is they own 90% of our data. All right, they own Facebook, they own Instagram, WhatsApp, literally everything. Their ad business is very profitable, okay? So with Meta, I love it long term because they're not going anywhere and they're trading at cheap valuations because of something that has nothing to do with the actual business model. The only reason they're lower like this is because they're investing a lot of money into AI and they're going to invest more. There's nothing wrong with that because the Googles are doing that, and the Microsofts are doing that, the Amazons are doing that, and they need to make sure that they win this race, and I'm not mad at that, okay? So really like Microsoft here. You can see within this chart pattern a bit that I drew here, this is a pattern where eventually this line's converging and this line's converging. They're going to meet, and the stock is going to have to, the pressure is going to be coming up for the stock, all right? So I think Meta is a great buy and hold. I think it's a good 10-year buy for sure, because the company's not going anywhere and they're making money and they're down for apparently no reason, okay? Last but not least, I have MasterCard for our 3rd stock of our 10%. Now, as you can see again, the reason I have MasterCard is because on this purple line, the 200-day moving average, look what happens. We have one touch here, it bounces. Few touches here, it bounces. Touch here, it bounces. Every time it gets down here, it bounces, all right? And MasterCard is one of those companies where they have a piece of the transaction in anywhere in the world every time you pay for something. All right. So MasterCard has an undefeatable moat, meaning like edge. There you can't beat them because they're involved in every type of transaction. You always go outside, you're spending money somehow, you're using a card that's either on Visa or MasterCard. All right. So I love their moat. They're not going anywhere. They're a great profitable company that's, again, at a cheap price that's touching the 200-day moving average. That's where you really know you have a good opportunity to invest into a buy and hold, is when they're at this 200-day moving average on the 10-year weekly chart. Okay? So those would be my top 3 overall for individual stocks. Now for crypto, again, I really like XRP because XRP has a use case with being able to instantly send money across countries and having businesses be able to do that. And also I love Ethereum because it's being the base of a lot of the tokens that's being created through the banks. All right. So I really like those 2. But again, that should only be, in my opinion, this is not financial advice, 10% of your investment portfolio. So that way you're not risking too much. That's your risky bread, because anything can happen with crypto. It's not like stocks has been around for 50 plus years. Crypto has been around for a bit now, but not as long as stocks. Okay. That's all I got for y'all. Y'all let me know if you got any questions. If you're looking for the actual way to set up an investing and trading portfolio, get involved in our Discord. It's gonna be in our bio for our link. Let me know if y'all got any questions in the Discord, man. It's D Waugh. I'm out of here.